All right, let's talk taxes. Specifically, we're diving into the 2026 Canadian tax changes that are going to hit your wallet. There's some good news, a little bit of bad news, but don't worry. By the end of this, you'll know exactly what's coming.
So the big question on everyone's mind, right? Will you actually have more money in your pocket or less? We are gonna answer that. We're gonna break down everything from your savings accounts to your tax deductions piece by piece.
So here's our game plan for today. We're going to kick things off with some really great news for your savings. Then, we'll get into a mandatory deduction that's going up. But stick with me, because after that, it's back to the good stuff with an income tax cut. We'll also clear up all that confusion around capital gains, and then we'll put it all together to see what the bottom line is for you.
Okay, let's jump right in with the good stuff. The government is giving all of us more room to grow our money tax-free, and this is something literally every Canadian can take advantage of.
Yep, you heard that right. Just like last year, every eligible Canadian is getting another $7,000 in their tax-free savings account. You know, this is probably one of the most powerful tools we have, letting your investments grow and grow with the taxman never touching it.
Now here's the really cool part about the TFSA. That contribution room, it accumulates. It stacks up every single year you're eligible. So let's say you've never contributed before. Your total room actually depends on how old you are. For example, if you turned 18 way back in 2009 when this whole thing started, you'd now have a lifetime total of $109,000 in room. Pretty amazing.
Okay, now for the RRSP. The max you can contribute is bumping up to $33,810. But let's be real. This mostly helps out the high-income earners, people making over 180 grand a year. For most of us, our limit is still just going to be that standard 18% of what we made last year.
Now, if you are dreaming of buying your first home, you need to listen up. The First Home Savings Account, the FSHA, is getting another $8,000 of room in 2026. This account is an absolute game changer. It takes the best tax perks from both the TFSA and the RRSP and rolls them into one. Seriously, if you're planning to buy a home, this should be your #1 priority.
And check this out. This is a super important strategy you gotta know. If you don't have an FHSA yet, go open one before the end of this year. You don't even have to put any money in it. Just open it. Why? Because just by having the account open, you'll carry forward this year's $8,000 room, giving you a massive $16,000 to contribute next year. It's a no-brainer. Don't miss out on this.
All right, time to switch gears for a minute and talk about a little change that's going to affect your paycheck. I'm talking about the mandatory increase in your Canada Pension Plan contributions.
So, just as a super quick refresher, the CPP is that federal retirement plan that pretty much all of us working Canadians pay into. Think of it as a forced savings plan for your retirement, and both you and your boss are chipping in.
So what's actually changing? Well, for anyone earning over about $85,000, your maximum annual contribution is going up by $216. If you make less than that, the increase will be smaller, and hey, if you earn under $71,000, you won't see any change at all. So to put that number into perspective, for those at the top end of that, it works out to about an extra $8 coming off each paycheck. So yeah, nobody loves a bigger deduction, but when you break it down like that, the impact isn't quite as scary. And look, it's really important to remember this isn't some tax that just disappears into thin air. It's a direct investment in your own future. The more you put into your CPP now, the bigger that pension check is going to be when you finally retire. But don't you worry, we are heading right back to the good news. And this is big, because to more than make up for that little CPP pinch, the federal government is actually cutting your income tax. Let's see how they're doing it. This right here is the biggest change, and it is fantastic news. The tax rate on the lowest federal income bracket is dropping a full percentage point, from 15% down to 14%. And you know what the best part is? Since every single taxpayer earns money in this bracket, this is a tax cut that benefits literally everyone. And the tax relief doesn't stop there. The second piece is an adjustment for inflation. All the tax brackets are getting expanded by 2%. What that means in plain English is that more of your income gets to stay in a lower tax bracket before it spills over into the next higher one. It's all about leaving more cash in your pocket. And finally, the basic personal amount is going up. That's the chunk of money you can earn before you pay any federal tax at all, and that amount is increasing to $16,452. It's a core tax credit that helps lower the bill for all Canadians. Okay, let's address the elephant in the room: capital gains. A capital gain is just a profit you make when you sell something, like stocks or a rental property, for more than you paid. Now, you probably remember all the chatter back in 2024 about a possible tax hike on these profits. So, what's the final verdict for 2026?
It's off the table, completely. The proposed changes have been totally scrapped, so the rules for taxing your investment profits are staying exactly the same. You can breathe a huge sigh of relief on that one.
And actually, for all you business owners out there, there's some great news here. The lifetime capital gains exemption, that's the rule that lets you sell your business tax-free up to a limit, it's getting a major boost, climbing to over $1.275 million.
All right, we have covered a lot of ground. Savings accounts, pension deductions, tax cuts. So now it's time for the bottom line. When you put it all together, are you better off or worse off?
So to recap it all, you're getting more room to grow your savings tax-free. You're going to have slightly higher CPP deductions taken from your paycheck, but, and this is the important part, you're also going to pay less in federal income tax. When you do the math, those tax cuts are designed to be bigger than the CPP increase, which means most Canadians should actually see a little more money in their paychecks in 2026.
And that is your 2026 tax update. We've laid out the new rules, the new limits, and the new rates. So that really just leaves one last question for you to think about. Now that you know all this, what's going to be your first, most impactful financial move of the new year? Thanks for tuning in.